Hey traders, welcome back to this week's weekly Forex forecast. Last week, unbeknownst to me until kind of halfway through the week, we actually had the stock market closed on Thursday for the memorial service of ex-President Jimmy Carter. And this caused last week to be pretty choppy because we had that Thursday break and then we had non-farm payrolls on the Friday, which traders were kind of waiting for as well. Non-farm payrolls did come out and it basically broke open a pretty low volatile week last week, bit of a boring week to be honest. And we had a hotter than expected print on non-farm payrolls. So the US labor market, based on the official figures, is tightening. And this is, of course, inflationary. And at the same time, we're seeing a reacceleration in crude oil to the upside. That upside breakout I was kind of warning about at the tail end of last year. And we're getting that gas breaking out, something else I was highlighting at the end of last year. So you're going to see as we go through the video, we're getting a reacceleration of inflation regime. And for that reason, going into next week, the US dollar, because as we get a reacceleration inflation, the US dollar benefits as bond yields go up. And this is my number one long theme. I do think we're going to make a run up over the first quarter. Maybe it goes into Q2. Sometimes these can take longer than you think. But it looks like we're making a run to the prior highs now in the DXY up near 115. And alongside that, you're also going to see, because of this breakout, we're now getting to the upside in crude oil. The Canadian dollar is back on the long theme side once again in today's video. It's been something we've been shorting for quite a while. Coming into this week, it is back on the long side. It's actually my second favorite currency going into next week. So going to go through all of those in today's video. Just bear in mind, we also have US CPI coming out on Wednesday, and that's likely to bring some volatility into the markets as well. So I'd like to really trade the dollar pairs before Wednesday's US CPI, be out of them if possible, and then get back in after US CPI. Try and avoid that CPI print next week, especially if you're short-term trading and fading moves like I am and like we do in the GMT room with members. Okay, so moving on to the market selection, portfolio selection, and it's quite clear to the upside. The two currencies we should be focused on this week are the US dollar, because again, we're seeing a reacceleration inflation bring crude oil up. Whether that's reflected in Wednesday's CPI report remains to be seen. I wouldn't be surprised to see an upside surprise, but it's very difficult to predict those in advance. But the US dollar as the number one long going into next week is the currency I want to be focused on, again, primarily before CPI and then after CPI. The second currency, the Canadian dollar, again, benefiting from crude oil going higher, which of course is inflationary in and of itself, and this is dragging the Canadian dollar up. And whenever you see the US dollar and the Canadian dollar side by side at the top of the hedge dash performance metrics, this is telling you you have an inflationary regime taking hold. That is exactly what you see, because normally they would be doing opposite things. You would see the US dollar up, the CAD down, or the CAD up and the US dollar down. But when you get reacceleration inflation, you see both of them going up. Canadian dollar with crude oil, and then because crude oil is going up, you tend to see bond yields going up. But only when you really get an acceleration inflation, not just a kind of benign inflationary kind of regime. So we are seeing that. Everything's pointing towards that, from the commodities to the Forex markets. And the third currency to the long side is a little bit more tricky, but we're going to go with the euro. Now, the euro, obviously 57% of the dollar index. If the dollar goes up, the euro goes down. But it does also have a slight safe haven quality to it when you start to see risk off. And as we're getting bond yields going up, we're starting to see this weigh on the US stock market. We're seeing stocks sell off. Now, this is not crash territory for stocks. This is more, 2022 kind of grinding, a bit more grindy bear market kind of thing. Maybe it's not even a bear market. Maybe it's just a short-term correction, 10 or 15%. But this is not a deflationary 2008 or 2001 outlook. This is more like a 2022, reacceleration inflation and kind of correction. So with that said, I am going to go with the euro for number 3. So we'll be looking at the US dollar to the long side, the Canadian dollar to the long side, and then the euro to the long side, vis-a-vis the Swiss franc and the pound. And we have quite an interesting composition here of the currencies, because when you get a reacceleration inflation, you tend to see the euro suffer. But actually it's holding up, and it's almost again like we're getting some kind of flight to safety quality at the moment in the euro, at least on a relative basis. Obviously, it's going down against the US dollar. So I am going to be looking the short side to the Swiss franc. We're going to look at US dollar franc, CAD franc to the upside. We'll look at euro franc to the upside. We're also going to look at the pound pairs with a short pound theme. So pound dollar to the downside, pound CAD to the downside, euro pound to the upside. Very important chart we're going to look at in today's video. Massive reversal, and this is usually very risk off. Whenever you see euro pound rallying as we're currently seeing it, if that can hold and it starts to trend to the upside, expect further downside in stocks and expect the risk off regime to start to kick in, because that's what happens when the euro starts to outperform the pound. That's one of the reasons why I say it looks like we're getting a flight to safety quality in the euro, because we're starting to see it outperforming stuff like the pound. And to the short side, also the New Zealand dollar. Now, it's a commodity currency. In kind of inflationary regime, commodity currencies do well, but it's not a commodity currency in the sense that the Australian dollar is, benefits from gold, etc. The Canadian dollar is, with its oil exports. So I am still looking to the short side with the New Zealand dollar, and so we're going to be looking at Euro New Zealand to the upside, New Zealand dollar to the downside, and New Zealand CAD to the downside as well in today's video. Okay, so kicking off the watch list with crude oil, as we always do, and this was the reversal I was warning about because of the lack of ability to actually make new lows, and in fact it's setting up a bit of a wave too. And I did say to you, the problem with shorting this is if this starts to break, as it has done, then you can see quite volatile and sharp impulsive moves. So we are getting this to break out. I can only buy crude oil next week. I absolutely cannot be a seller of crude oil. I'm only looking for long opportunities in crude oil next week. So I'd like to see crude oil pulling back and next week breaching the lower bound here. There's our first range, which if we breach the upper or lower bound, we're overbought and oversold during the week. And the second range, which if we breach to the upside or the downside, we're extremely overbought or extremely oversold during the week. And then these levels reset automatically in the hedge dash system at the weekend for the following week. So I want to see this enter the buy zone between these two levels, because this is where we go from being kind of neutral to oversold or extremely oversold, depending on how far we push down below this level. So if we breach the 73.98, this is where I'm going to be looking to step in next week. And once we breach this level, what I do is I drop down to lower time frames and I start to look at, are we lacking momentum? Yes, we're lacking momentum. Okay, do we have a reversal pattern? If we do, then this is the opportunity that I'm looking, because usually you get the market, say, trending down. It's a strong market. It gets into this area and then it starts to struggle. And anybody who's shorting in this area, as they start to pull their positions, you get a liquidation, usually for 1 or 2 days. That's what I'm looking to capture each week with GMT members, and these are the exact setups that we're looking at. So I want to capture 1 to 2 days worth of move out of these markets, out of 5. So if we do breach 73.98, this is where I'm going to be dropping down to lower time frames, looking for that snapback, that liquidation to the upside for 1 or 2 days. If we blast through here and let's say I buy it down here and it pushes all the way against me and takes out the 74.40, this is the second place. It's the second bullet in the chamber where I can pull the trigger and I can take another position in crude oil to the upside, looking for a reversal, because the odds greatly increase once you turn extremely overbought or oversold. So usually if I get involved here and it moves against me, I use this to cost average my initial position. Or sometimes I'm not involved in an initial position, it comes down, and this is a fantastic first opportunity to get involved. So those are things I'll be looking at. You can also look for the pullback towards the lower bound, breaking below the moving average. And then of course, instead of taking out the lower bound, it breaks back above the moving average follows it. And you can get that bull flag set up intra-week. And that's when usually you take out the target to the upside. In this case, 79.15, great profit taking target in crude oil next week. Okay, so kicking off the Forex universe with the dollar pairs, starting with euro dollar. Now I usually start with my favorite pair, work my way down, but we look at euro dollar every single week. This is not my favorite one going into next week. Why? We just established that the euro, yes, it's weak against the dollar, but it's relatively quite strong against other currencies. So if I'm going to buy dollars, I would prefer to buy the dollar and short the pound. I would prefer to buy the dollar and short the Swiss franc. I would prefer to short the New Zealand dollar and buy US dollars. But if push comes to shove and we get the opportunity, euro dollar to the downside is an opportunity I would consider, because the euro is still just neutral. It's not a strong currency. US dollar CAD, I would leave because they're both strong. I still think the US dollar probably goes up against CAD, but there's much better opportunities outside of the US dollar CAD pair. So going into next week then, what I'd like to see in euro dollar is I'd like to see euro dollar pull back, breach the 1.03687. This is where we enter the sell zone, and this is where I'm going to drop down, start to look for setups once we enter this area. There is a nice low here, and if we can pull back and retest this, this would be a great place to look bear in mind, I would like to be in and out before Wednesday, and then primarily, if I'm going to be, shorting euro dollar, get back in after Wednesday, or if there's no opportunity, you start to trade after CPI. Because on CPI, you're going to get volatility. So I would like to see this pull back 1.03687. This is where I'll be looking for a reversal for 1 or 2 days to the downside. If we blast through here and we take out the other side of the range, or this kind of sell zone, the 1.04923 is where this market becomes extremely overbought. Now, you can get to these gold levels with catalysts like CPI. Hence why, I'd probably avoid shorting from the first upper and lower bounds, or at least wait for the news to come out and have a look before jumping in. So that would be the second place. I'll be looking to short euro dollar next week. And the third thing you can look for is, let's say CPI comes out, you're not involved, and you get that initial sell-off. Look for the moving average to follow it, and you get that bear flag set up into the lower bound next week at the 1.01217. Great profit taking target to the downside in euro dollar. Okay, so going into next week, my favorite dollar pair is US dollar Swiss franc. We are trending really nicely to the upside, and everything we've looked at in today's video suggests we should be looking for long opportunities only in US dollar Swiss franc next week. What I'd like to see primarily, as always, is a breach of the 0.90668. This is where we enter the buy zone next week on a pullback. And I would be looking to buy the dip, looking for momentum to slow, looking for those bullish reversal patterns for 1 or 2 day profit target. And also, if we breach this, a second place I would be looking for a long opportunity is below the 0.8969. If we breach this, we're probably going to take out this high. Breach this, test this. This would be a great place. Whether I'm already long, just risk managing it, hopefully that's not the case, because I end up just usually with a break even or a small loss if that's the case. But if I'm not involved and we come down to here, first of all, something abnormal has happened. You would had to have had, the outcome of CPI would have to be extremely negative for the US dollar to get down here. Don't think it's going to happen, but always good to have a backup plan. And mine is below the 0.8969 in US dollar Swiss franc next week. And the third and final thing is we may just chop around in CPI. And then you get the breakout on CPI in the direction of the trend. Maybe we get hotter than expected CPI. That wouldn't surprise me. Then you can look for the pullback. The first pullback into the moving average and the move away, that sets up your bull flag in the 4-hour chart. Into the profit taking target next week to the upside, US dollar Swiss franc is 0.92612. Next is pound dollar. I can only be short or do nothing. I cannot buy pound dollar next week under any circumstances. So what I'd like to see is, I'd like to see pound dollar pulling back, breaching the 1.2376, and this is stair-stepping into the prior low. These are great setups. Whenever you see this, this is fantastic, because we're stair-stepping the prior low, we pull back, we're also testing the moving average, which is trending down nicely, and if we move above the 1.23768, we enter the sell zone, we become overbought during the week. That is going to be a great place for a 1 or 2 day reversal next week. If we blast through there, and again, this would only happen with a very, very, very bearish outcome for the US dollar on CPI, which I don't see happening. But if we were to do that, above the 1.25457 is the second place, especially if we breach this and took out this high. This is where I'd start to look for a 1 or 2 day reversal to the downside, whether I'm short or not. And the third and final thing is, which is also probably more likely than pound dollar coming up here, is that actually the dollar pairs don't do too much into CPI. And then what happens is on CPI, you get a big sell-off, maybe hotter than expected print, and it moves away from the moving average. And that first pullback into the moving average is the opportunity down to the 1.20392 for a bear flag setup in the 4-hour chart in pound dollar next week. And the final dollar pair is New Zealand dollar. I can either be short or do nothing like the other markets. I cannot buy this market next week. So what I'd like to see is I'd like to see this enter the sell zone, which is above the 0.5636. If we breach this, I'm going to be dropping down, first and foremost, looking for momentum to fade, and then looking for those bearish reversal patterns as buyers realize they've made a mistake, pull their positions, and you get this sell-off. Now, if you get tests of these upper and lower bounds before CPI, if you get them on Monday, that's actually a pretty good sign, because usually leading into CPI or interest rate decisions, these markets chop around. Very much like with euro dollar last week, we took out the upper bound fairly early in the week, and we had non-farm payrolls on the Friday, so what happened? Sell-off back inside the range. Trade I actually missed, but I was eyeing it up and I missed it just by a handful of pips. It missed my short order above the upper bound. But that is a great example of having a news catalyst at the end of the week. You get the market moving above or below its upper or lower bound during the week. And because no money is coming in before the news event, you have a much higher probability of reversing. So if it does that before CPI, that's a good opportunity to get involved. If it blasts through here, again, not expected to happen, but with CPI, you know, it'd have to be a big miss and you'd have to see big US dollar weakness. If that were to happen above the 0.57169 is the second place, I'd be looking for a 1 or 2 day reversal lower, whether I'm involved with a short already or not. And the third and final thing is, which I think is maybe, you know, one of the more likely scenarios, the market does nothing in CPI, then you get a breakdown on CPI, a pullback, the moving average follows it, and that sets up your bear flag setup intra-week into the 0.54756, great profit taking target to the downside in pound dollar next week. Okay, so moving on to the CAD long theme, starting with CAD franc. What I'd like to see is, I'd like to see this pull back, and look how nicely this is setting up if we can get a pullback here. We pull back, we're going to stair step right into the prior high, which looks like a second wave. First wave, we pull up, we break out, we pull back, we retest, and we could even see a much bigger move from there. But I'll still be looking mainly just for short-term opportunities, 1 or 2 day returns. If we can breach the 0.62908 and stair step this is going to be a great place to start to look for a reversal to the upside. If we break through there, I don't see this happening. But if we do break through here and we take out the 0.62256, something abnormal has happened. We're probably getting a reversal to the downside. And again, is that going to happen with crude oil where it is? Unlikely. But it's always good to have a backup plan. If we do breach 0.62256, this is where we become extremely oversold during the week. And it's the second place I am allowing myself to take a second position in this market, should I be already long. And the third and final thing is, if we start to just chop around, and again, with the CAD pairs, we don't really have any of that data. We could see everything get choppy on CPI. Sorry, everything get volatile on CPI, not choppy. Because CPI, you know, affects the dollar, but it also, the dollar affects all of the currency pairs. Really, when the dollar's not moving, a lot of Forex is a little bit dull, as we saw last week. So I would also look for this kind of moving average to flatten out, preferably start to trade below it, and then you get the kind of consolidation breakout. The moving average follows it, and that sets up your bull flag setup into the upper bound, in this case, the 0.64212, great profit taking target to the upside in CAD franc. Next is pound CAD. Now look how nicely this is printing this chart. This is really, really nice to look at. We get the head and shoulders with a breakdown, we pull back, we test the moving average, we sell off with momentum, and now we're looking at the prospect of a pullback, a stair step into the prior low, and also a test of the moving average and a breach of the 1.78149, where we become overbought during the week in the market. We should be looking at being short. And on top of that, for those of you who like your trend lines, if you draw one down here, it pretty much intersects right here as well. So if we breach the 1.78149, I'm going to be looking for a 1 or 2 day reversal to the downside. If we blast through here and take out the 1.80259, again, this would be a major trend reversal. How's that going to happen? You need some kind of catalyst. So absent a catalyst, I don't expect that to happen. But if something unexpected happens and we take this out reactively, this would be the second place. I'd be looking for a 1 or 2 day reversal, whether I'm short already or not. And the third and final thing is, if we start to pull back, we breach the moving average perhaps, we start to try to stair step this, but instead we just get momentum back inside the direction of the trend, or back in line with the direction of the trend. Look for the pullback in the 4 hours, first move to the moving average and push away, and that sets up a nice bear flag setup next week in pound CAD into a prior low over here as well. The profit target to the downside is 1.7393. And the final CAD pair we're going to look at is New Zealand CAD to the downside. Obviously, I can either be short or do nothing in this market. I cannot buy this market. What I want to see is, I want to see the market pulling back. It's quite choppy. And again, the New Zealand is a commodity currency. It's kind of holding up. But if we can get the market pulling back, and if we can take out the 0.80975, this is where I'm going to be looking for momentum to fade. I'm going to be looking for bearish reversal patterns for a 1 or 2 day liquidation back inside the range. If we blast all the way through as a backup plan, there's a nice stair step over here as well, right at this prior low. If we do trade into this area, this is the second place I will allow myself to pull the trigger on a short in New Zealand CAD, whether I'm short already or not. And the third and final thing, especially if you get a kind of fast market, we could pull back, attempt to take out the upper bound, and then you get the sell-off back in the direction of the trend. The moving average follows, and you can look for that bear flag setup into profit-taking target to the downside. In this pair is 0.79265. Okay, so wrapping up the markets then with the euro pairs, and I mean, just look at the chart. Is this as nice as the other charts we've looked at? Not really. US dollar to the upside, Canadian dollar to the upside. Those are the two best themes. I always look at 3 currencies to the upside, 3 to the downside. So, Euro franc, Euro New Zealand, the Euro pairs are really going to be once we use up the opportunities in the CAD pairs and the dollar pairs, or if we, get these opportunities instead. But I prefer the dollar pairs and the Canadian dollar pairs, so the US dollar pairs and the Canadian dollar pairs going into next week. However, I am also potentially interested in Euro pairs to the upside, just on a relative basis. So if we get the Euro selling off and we take out, in this case, the 0.93250, this is an area we don't really have any lows. I like it when we have a kind of low like this and it's, quite close. This is quite far down. Not often are we going to test, 3/4 of the way or even halfway towards the gold level. So if it does breach the 0.93250, it's going to be important to look for more near-term support levels. Maybe it bounces like this and then you get a support level down here. I'm going to start to look for momentum to fade. 1 or 2 day reversal to the upside is something I would consider. If we can break through here and take out the 0.9261, this has nicer support at it as well. So if we do take this out, it's the second place I'll be looking for a 1 or 2 day reversal, whether I'm long already or not. And the third and final thing is, if we start to break down, you can look for that intra-week breakout, but they tend to work better with very, very strong currencies and very weak currencies. So when you get kind of neutral euro, do you really want to be, intra-week breakout trading it? There are better setups next week to take. But if we do get a breakout, if you start to see momentum coming in for whatever reason, then you can look at this for that kind of pullback into the upper bound 0.9453. Next is Euro Pound, and look at this momentum to the upside. This is not good for risk assets. Very often this is not necessarily causal, but at the very least is reflective of risk off coming into markets. And what I like about this market is we have the lower bound sitting right at the prior highs. Look at also how big this range looks. This tells us the market is expecting volatility next week in Euro Pound. Why it's expecting volatility, to that extent, I don't know. But the markets are telling you that it could get volatile next week. That's why we've got bigger ranges here, because these are automatically updated and calculated. So if you have a wider range, it means the market is expecting potential volatility in that asset. What I'd like to see is, this is a really nice setup. All of the pound pairs are actually setting up nicely next week. If we get a pullback and we can breach the 0.83190, we enter the buy zone. We also stair-step these highs over here, which is exactly where the momentum kicked in when we broke out of here. So it pulls back, retests. And we'd be somewhat below the moving average at that point, but that's not a big deal. This would be a great place to start to look for a 1 or 2 day reversal to the upside. Again, it could be the start of a much bigger move, but I'm really just looking primarily for short-term trades because the big moves don't happen that often, maybe a handful of times a year. So that is going to be a good setup should we be able to get it next week. If we blast through here and take out the 0.82460, very unlikely, not expecting it at all, but as a backup plan, this is the second place. I can look for a 1 or 2 day reversal to the upside. And a third and final thing is if we break down below the moving average and then we break back above with momentum, this is a market, unlike Euro Franc, I think this actually is a nicer structured market where you could look for that bull flag setup into the upper bound profit taking target next week at 0.8465. And the final Forex pair before we move on to gold and silver is Euro New Zealand. We're already pulling back, we've already got a correction. So if we break back down below the moving average and we take out the 1.82465 reactively, I'm going to be looking, we have a nice high over here for a nice stair step. I'm going to be looking for momentum to fade once we enter the buy zone and for a 1 or 2 day reversal back inside the range next week. If we, for whatever reason, it's not expected, but if we start to sell off in a strong way and we take out the 1.80520, there are also some nice prior highs over here. So again, we've got some confluence. This would be the second place I'll be looking for a 1 or 2 day reversal. You should not expect the gold levels to be hit. Unless you've got a catalyst like CPI, then it's not abnormal. If you've got CPI, very easily we could see the gold levels hit in the dollar pairs, for example. But if you haven't got a catalyst, it's very unlikely the gold levels get hit. They're really backup setups. Okay, our primary setups are above and below the first upper and lower bounds. Because 70% of the time you should be trading, back inside the range. That's what the market's pricing with these levels. And the third thing then you can look for is, because we've got this kind of nice move into it, you could look for this, already got the consolidation. So you could look for this to break back above the moving average with momentum. It's already above it, but we don't have much momentum. And you can look for that bull flag setup into the upper bound profit taking target to the upside next week at the 1.86355. Okay, so wrapping up the video with gold and silver as we always do. Now, I'm only looking for short positions in both gold and silver. Why? Because when you've got a strong dollar, it tends to cap upside in both gold and silver. And in fact, silver can actually sell off quite strongly when you have a strong dollar. So I'm only interested in short positions heading into next week. However, with gold, when you get reacceleration inflation, you can see gold going up with the US dollar. They can both rise at the same time. Again, gold rising at the same time as the dollar tends to be, more choppy, and you don't have those explosive moves like you do when the dollar's weak. But relatively speaking, between gold and silver, I favor short positions in silver, but I am looking for short opportunities in both gold and silver. So what I'd like to see next week, if we can push up in gold and we can take out the 273970, we enter the sell zone. There's a really nice high over here in the 4-hour chart as well. This would be a great place to start to look for momentum to fade, for price to stall out, and look for a 1 or 2 day liquidation back inside the range. If we blast all the way through to the 278924, this would be the second place, although it's unexpected to reach there, that I would be looking and prepared to short gold once again, whether I'm already short from here, again, or whether this was an initial position. And the third and final thing is you can look for gold to break back down below the moving average. You get this kind of correction or channel to the upside breaking out. The moving average follows it, and then you get that bear flag set up into the 2640.61 next week in gold. And last but not least, we have silver. Again, only looking for short opportunities next week. What I'd like to see is silver push higher. And look at this over here, this double top in the 4 hours. The breakout is right there, right at this prior low. So we pull back, we're stair-stepping right into the prior breakout low of this double top in the head and shoulders. I would not be surprised at all to see this test and actually reject. And this would be a great place to start to look for a 1 or 2 day reversal to the downside in silver at the 31 or above the 31.49. If we blast through here, if it kind of consolidates and then blasts higher, the 32.57 is where we become extremely overbought during the week in silver next week, if we get there. Not expected to get there, but if we do reactively, it opens up, gives me the ability to pull the trigger a second time on silver shorts. And the third and final thing is, again, you can just see this kind of channeling up and then breaking out. And whether you're drawing channel lines on here or not, what you'll see is the moving average will break, the moving average follows it, and then you get that bear flag set up into the lower bound profit taking target to the downside in silver next week is the 29.33. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.